All right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's see what this chart is saying to us. So right now, Rocket Companies had a nice run, and it leveled off, hit a newer high. It reached almost $24 and some change, and then there was some rejection there. Try to reach it again and it got rejected, and since then we've been in a bearish run. Now this run was due to the fact of the news, speculation, and excitement and hype about realtor.com doing some business with Rocket Companies. So I believe in the long term that could be a good sign for the company in potential wise, and hitting newer highs and growing and creating a earnings report either in the next one or the next coming ones that will grow if this will produce revenue and profits for them. And obviously we've been in a bearish run no matter how you look at it since those highs way up here at $34 and some change. And the volatility of the market, you can see it, and we have some supports here that are important way down here at 1940, and then also around here at 1990, almost $20. Right now we are currently not that far away from those numbers of 1990 and $20. It's currently at 2056, and it hit lows here of about 2025, 2024. So these numbers are important. We're going to look at our new support and resistance, as well as where the 50-day moving average lies and what to expect in the next coming days and weeks. So we're going to look at the lowest point of the day and the highest point of the recovery, and then the leveling off at 2056. So the 50-day moving average is way up here at 2142. I'd write that down. As long as we're below it, the bears are in control. The moment we cross it, the bulls are starting to gain traction and control again over this chart. So for the bulls to even get close to the 50-day moving average of 2142 to get back into bullish territory, obviously they need to break through this resistance. This resistance needs to be turned into a support. It's the first point of reference that gives us insight on which direction this is going, but the bulls need to confirm that into a support, break away from it, and it still does not signify that the bulls have gained control until they cross the 50-day moving average and end up in bullish territory. But again, this does gives us a sense of direction as investors of where this is heading. So the first resistance level for the bulls is 2090. They need to turn that into a support so they can start to reach newer highs and newer resistance levels. So it's very important for the bulls to break through this and turn that into a support so that they can go ahead and start to get closer to their goal of the 50-day moving average. On the other hand, we have the support level, and this support level is what the bears are trying to break through. If they break through this will start to see newer lows, and it's super important to pay very close attention to the behavior of this stock if it breaks through support, because it will be moving further away from the 50-day moving average in a downward direction. So 2026 is our support level. I want to emphasize to all investors, this is the lowest point in this bearish run. So it's super important to pay close attention to the behavior of this stock if it breaks through it or gets real close to it, and are the bulls trying to reappear and bring this one back up. So it's super important to put your 1 minute, 5 minute, 15 minute chart frames, and also look at the inflow and the outflow of the charts to see who is dominating the day with volume and how the chart is moving. So super important. Pay very close attention to how this stock is reacting if it breaks through 2026, and how quickly is it hitting newer lows and pulling further away from the 50-day moving average. I hope that with these cues, you guys will be well equipped for tomorrow's trading day to make your own rational decisions as investors. And as always, if you feel encouraged or inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to click that like button for me to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. and these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.